Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the continued sell off by Bitcoin USD and what are the main factors causing it. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothe.cryptoverse.com. Let's go ahead and jump in. So, I think there are two primary ways to view the current price action on Bitcoin. One of which is more of a seasonal view. The other is more of a macro yield view. Okay. And of course, it's up to you to figure out which one you want to put more weight on. But I will at least, again, present both of them here so that you at least know, what are the most likely outcomes based on the historical data. The more optimistic way to look at the market is to say still that it looks somewhat similar to a year ago at this time when Bitcoin rallied up in October and November and then stayed relatively flat until the end of January. Okay. But even during that period, you'll notice that Bitcoin did, in fact, have a drop from that high to that low of approximately 20%. Now, if you look at Bitcoin's current pullback from this high right here to the current low that it's hit, it's been about 17 to 18%. One of the things that I've mentioned is if you look at last year, you'll notice that Bitcoin also had a range low that eventually it swept below and eventually tagged its 100-day moving average. You can see it pretty clearly right here. Bitcoin was holding these lows, and then eventually it went below it, tagged the 100-day SMA, and then was able to eventually move higher into February. If you look at this one, this year we've talked a lot about the idea that Bitcoin would eventually sweep the low, and now it has, right? It has swept the low. It took a while for it to do so, but it has in fact swept that low, and it did so on the day of January 13th. If you look last year, when it finally went below the range low, it was January 22nd. Now, back then, Bitcoin held support at the 100-day moving average. For reference, the 100-day moving average right now is around 86K, but it is continuing to move higher. So, the more optimistic way to view the market would be just to simply say, hey, this is what normally happens, right? In January, at least based on what happened last year. Furthermore, you could draw the parallel between what happened in January of 2021 and January of 2017. For instance, in January of 2021, Bitcoin, in fact, had a 32% drop where it did not go to the 100-day moving average, right? And in 2017, it had a 35% drop where it did go to the 100-day moving average. So, and again, these are both Januaries of post-halving years. If you look at some of the other metrics that we've discussed, for instance, one of them is the stablecoin supply ratio oscillator. And if you look at that, you can see that the SSRO, this basically shows you the ability of stablecoins to move the market cap. You can see the SSRO eventually bottomed out right here in late January, and you can see that the SSRO is getting somewhat close to that level. Okay, so, and also, if you just look at the ROI, year-to-date ROI of Bitcoin, 2025 compared to 2017, you can see there was also a sell-off in early 2017. And even in 2021, it went up a little bit, but it really struggled to get going for a while. If you look at the market cycle ROI from the low, you'll notice that Bitcoin is right around the spot that it normally is at this point in the cycle. And in fact, in the 2016-2017 cycle, Bitcoin did go through a correction around this time period. So from a seasonal perspective, this was always expected. And in fact, I mentioned many, many times that we would likely have a correction in January of the post-halving year just based on seasonal data. And so because of that, it's easy to go find a narrative to support why it's happening. But if we were to try to find a reason as to why Bitcoin is getting this sell-off, it's obviously somewhat related to the fact that the S&P 500 has also been struggling recently. In fact, right now, the S&P 500 just filled the gap where it was right after the election. What's interesting is that the Russell has now gone below where it was when the election results came in, right? If you pull up the Russell, you will see, in fact, that the Russell 2000 with the election was right here, and now it's below that now. So if anything, Bitcoin has been holding up better than the traditional asset classes, because in order for it to go back to where it was when the election results came in, it would correspond all the way back down here at around $70,000. Now, the way to think about the market with the glass half full approach, the more optimistic view, right? Again, would it be to say, this is a seasonal thing. This always happens. So it doesn't really make sense to assume that this wasn't going to happen because you didn't want it to. When this does tend to happen in January of post-halving years, the market sells off. We can always find a reason for it. The counterpoint to that is that when the market did sell off in the last 2 Januaries of post-halving years, they did sell off about 30%, which is still quite a bit a ways down beneath where we currently are. However, Bitcoin still does have the bull market support band, even below the 100-day SMA, that it might try to find support at. And the only 2 times that it's fallen below the bull market support band that lasted for more than just a week, this market cycle, was back in Q3 of 2023 and Q3 of 2024. So the bulls, if anything, would try to hold support at that line if Bitcoin were to go back down to it. The only other way I think it makes sense to view this market, and it's the reason to have at least a little bit of caution, is if you look at the market conditions that are allowing for a sell-off in the S&P 500 and that it's bleeding over into Bitcoin, it relates to the long end of the yield curve. The long end of the yield curve, the 10-year yield, and the 30-year, the 20-year, right, they continue to go higher, arguably because the market really wants to know, has the Fed cut too soon? With the unemployment rate going down from 4.2 to 4.1%. And let me just show it. I hate saying stuff and then not actually showing it and leaving it to your imagination. But if you look at the unemployment rate, it has in fact dropped from 4.2 to 4.1%. And if you look at inflation, you'll notice that it's actually been going up for the last couple of months. Okay, so here you can see that it's been going up the last couple of months. And so I think the market is a little curious, right? I mean, are we repeating the 1970s where the unemployment rate started to go back down and inflation started to go back up, where we got a left translated peak, or the peak occurred in January of the election, of the post-election year, which is right around now? Is that an outcome? Or even the year after, where you got maybe it was the cycle, one of these cycles over here, right here, where the market topped in December of the election year, right? This is a left translated cycle where you get a 2-year bear market, and like in here in 73, a 2-year bear market, as opposed to a right translated cycle peak where you get a 1-year bear market. So whether you get that or not, the market's at least asking the question, right? Has the Fed cut too soon? Now the unemployment rate starting to go back down, but inflation is starting to go back up. And so because of that, because the market isn't as concerned about the labor market and is more concerned about inflation, all of a sudden the market's starting to price in, growth. Whether it should be or not, we'll find out later, but it's starting to wonder if it should worry more about inflation than the labor market. And because of that, the 10-year yield is breaking out. And so the thing to think about, the more pessimistic way to view the market, would be to say, well, there was also a time when Bitcoin when the 10-year yield broke out. And then when it broke out, it then back tested its 21-week EMA. And you can see that it's doing it once again, right? It did it right there. And during this period right here, right, as the 10-year yield went up, that actually corresponded to July to October of 2023. Well, July to October of 2023 was actually this period where Bitcoin ended up giving back all of these gains, right? It went up, it went sideways, it went slightly down, and then it dropped back to where the breakout point started, found a low in Q3, and then went up in Q4, right? So you can see that right there. One of the things to consider is if you look in over here, you can see there were some range lows. Eventually, Bitcoin broke below it. If you look today, range lows, Bitcoin has now broken below it. Now is where it starts to get interesting, because this is where it deviates. If you look at here at the summer of 2023, there was also technically a range low eventually it fell below it. And rather than get an immediate bounce back up to new cycle highs, it then consolidated below the range low between that and the bull market support band, and then it fell back down, giving back all those gains. So the more pessimistic way to view the market would be to say that, well, is it possible that Bitcoin gives back the gains that it got after the election, just like the S&P 500 has done, and just like the Russell has done, right? They've both given back all of their post-election result gains. If Bitcoin were to do that, it would mean coming back down to that level right there, okay? So more optimistic way to look at it is that it's seasonal. We always get a correction, or we typically get a correction in January, the post-halving year. It tends to be a 30% correction. So far, we haven't even had a 20% drop, right? So what's everyone so upset about, right? This is what happens in the market. Market goes up, market goes down. Last year, we saw Bitcoin not even find support until the end of January. So what are we worried about? Pessimistic view would be the more macro take on the long end of the yield curve, which would essentially argue that as long as the 10-year goes up, it's a headwind for risk assets. And if you overlay the S&P 500 with the 10-year yield, you'll notice that it was right here when the 10-year yield was going up. That's when the S&P 500 sold off. And that is when Bitcoin gave back those gains, right? These gains that it gave it back as the 10-year yield continued to go higher. Okay, so I think the 10-year yield will top in Q1 of 2025, and I think the dollar will top in Q1 of 2025. I think the issue is, when does it top? Does it top now, or does it take another month or two? If it takes another month or two, then that would be a headwind for Bitcoin. If it tops now, then that would be a tailwind for Bitcoin. And you can see the minute the 10-year yield topped back in 2023, the S&P bottomed, and that's when Bitcoin began another breakout. You want it to top for the right reasons, not the wrong reasons. You want it to top because the labor market is weakening a little bit, not because it's weakening a lot. Okay? And I think that is the key thing to remember. And you should see that happen relatively soon, because if you look at initial claims, last year around this time is when they started to go back up, right? They bottomed out mid-January and initial claims started to go back up. So if initial claims bottom out here relatively soon and start to go back up, that could be a reason for the 10-year yield to potentially top out. Another reason the 10-year yield might top out is if the Fed can come forward and say, we're done with rate cuts for a while. If they're done with rate cuts for a while, then the 10-year yield might say, all right, we don't have to worry about looser monetary policy leading to inflation reaccelerating. They're done. But if Powell comes out and says they might keep cutting, that could lead to the 10-year going higher. Remember, it was when the Fed started cutting in September, that's when the 10-year bottomed. And ever since they started cutting, the 10-year yield has been going up. And as it's been going higher and higher, risk assets face stronger and stronger headwinds, okay? So that's the other way, right, is to say, all right, it could be a seasonal thing, but if it's more than a seasonal thing, then it's likely due to the long end of the yield curve unrelenting, right? Just continuing to go higher. And if it continues like it did the last time this happened, then you could get something like that. And, one way it could play out is you see it drop, consolidate, and then eventually move higher again. I mean, that's exactly what it did over there in 2023. So just be open-minded to that outcome. I've sort of said worst case short-term scenario is for Bitcoin to sort of back test where it broke out from. And that would essentially correspond to just going back to where it was as the election results came in. This is not one of those things that's Bitcoin related, right? I'm not saying it could go there because Bitcoin's doing something it shouldn't be doing. It's just simply due to macro conditions. And hey, this is the stock market. This is the Russell. It could happen to Bitcoin if it were to repeat what it did in 2023 when the 10-year yield was breaking out. But again, over the long haul, the optimists do better than the pessimists. And so I'm trying to show you these scenarios in case of these particular outcomes play out. You kind of know like what's going on, like what's happening behind the scenes that's allowing the market to drop like that. This is a normal drop, right? Bitcoin dropping from 108 to 92. This is standard in January of post-halving years, right? Nothing is different right now than what normally happens. And hopefully it doesn't become different than what normally happens. But if there is a larger drop like there was over here, it's likely attributed to the 10-year yield and the long end of the yield curve continuing to go higher and higher and higher, and essentially causing that weakness by risk assets. So that's more or less why I think Bitcoin has been struggling for the last few weeks. It has all to do with the long end of the yield curve, basically saying, hey, the Feds may be cutting too soon. And if they are cutting too soon, then that means we could get rate hikes in the future rather than rate cuts. Furthermore, I wanted to check back in with the S&P because if you guys remember, the S&P in 1998 also found a short-term top around this time. I've mentioned this many, many times. And if if the S&P is dropping, Bitcoin's dropping generally too. But this is exactly where the S&P had trouble breaking through. It did eventually break through, but initially it actually got rejected and then it broke through. So if you were to see something like that play out, if the S&P were to sell off, that might actually introduce QE back into the market, and maybe that would lead to it sort of breaking through just like it did over here in 1999. But I did want to at least put this stuff on your radar because a lot of it does seem to be playing out like 2023 in terms of the 10-year yield going higher and risk assets selling off. And then another factor is that it tends to be, it is also just similar to what we normally get in January of post-election years, post-halving years. And so the way to sort of differentiate between the two, I think, is to watch what happens here at the range lows. Okay, so if you're basically saying, well, isn't he just saying it could go up or down? If anyone's telling you differently, I don't know. I mean, they must have a crystal ball. I don't have one. But what you look for is this. Okay, this is what you look for to try to figure out which one is prevailing. Last January, when we wicked below the range low, we only stayed there a few days. Okay. In 2023, when Bitcoin went below these range lows up here, it just kind of kept slowly bleeding and not staying above it, right? So if Bitcoin can just stay above 90K for the next week or two with very little trips below 90K, then it's more reminiscent of this than it is over here. But if Bitcoin drops below 90, right, and then it drops below 89, and then 88, and then it pops back up to 90, and then it goes to 87 and 86, and it does kind of like what it did over here, right, where it just slowly drops after it drops below the range low, it then slowly drops. That would lead me to believe more so that it could evolve into something like that, where it eventually gives back those gains, and then we have to consolidate at a lower level for longer, and then try to work off from that level. So that's the way I think you can go about this, with somewhat of a plan to say, all right, it's going to depend on how long Bitcoin spins below the range low. The longer it spins below 90K, the more likely it could be to repeat what the S&P and the Russell did, where they give back their post-election gains. As long as Bitcoin can stay above 90K over the next week or two, the implication would be, hey, it looks more like what happened last year. Therefore, hopefully we can just move higher into February, exactly like we did in 2024 and exactly like we did in 2017 and like 2021. Okay, so that I think is the main thing the market is focused on right now. What is the reaction of Bitcoin here at the range lows? Can it stay off those range lows, or does it just slowly bleed back down? And once you figure out what's happening there, it should give you insight into what's going to happen as we get further out into Q1. Keep an eye on the 10-year yield. Keep an eye on the macro data. If recently good news has been bad news, right? As long as inflation's coming in hot, or not inflation, as long as the unemployment rate's coming in low, that's actually been bad news because it just continues to make the bond market call into question the Fed's resolve. Have they cut too soon? And if they have, does that mean they have to raise rates sooner than we might think? Again, not my base case because the unemployment rate has been in a macro uptrend, not a downtrend, but the market is at least asking the question. And it's the question that is being asked that's causing the 10-year to go up. It's causing Bitcoin to sell off. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. We have 3 videos each week, most weeks. Also a website with a ton of stuff, so make sure you guys check that out. Lock in the low rate, and I'll see you guys next time. Bye.